and again, I'm new to the committee, and I have a high level of respect for you. I'm looking at your chart of comparison of business tax-based options, and under the weaknesses, you talk about with the gross receipts tax that there's a partial shifting to consumer. Your staff makes the same comment under value-added tax. We don't say that under the corporate income tax. I can't imagine that corporations today still aren't passing that on to their consumer. Under our current form of taxation, couldn't we make that argument as well? And I'm not trying to split hairs, I'm just...
Well, Representative Smith, it's safe to say that a lot of ink has been spilled over this issue over the years. It has been debated from my perspective, and if you look at it theoretically, a sales factor-based, destination-based apportionment formula would tend to generate more of a shift on consumers, because it's based on Oregon sales. So it has that same base. So whereas on the other hand, if you have more of an apportionment based on the other factors, property and payroll, some of the literature suggests that you do see some backward shifting in that case as well, which you would see shifting onto labor and other factors of production. But of course, a corporation is rarely in a situation where, if they're an exporter, where they can shift a state tax on into a world market where they're a price taker. They're much more likely to be in a position of shifting prices on for domestic goods that are in a domestic market where everybody's paying that tax.
Got it. Thank you. Mr. Co-Chair, thank you for letting me ask questions.